All right, fam. So we have got something special for you today. Classic Kingy fucked up and gave you the wrong date, which is always good. It was supposed to be today. I don't know why I pressed the 16th. My hand must have slipped when I selected it. So we're going to film this. For those of you that are on, feel free to ask your questions. It's probably a better thing to be on live and doing, but I'm going to record it and post it out, and we know everyone jumps on and watches them and then comes back. And if we need to do another one, we will. But to give you some idea of what's going on today, so Matty is a client and himself, he come through Izzy. Izzy, for anyone who's known him long enough, has been a Forex trader for quite some time. Pretty good at it, but he's a pussy, so he never goes big enough. He always just sits back and makes little trades. But he's a gun, and he's got some great analysis. There he is. Some great analysis going on, and you wouldn't believe it, but I haven't even shared my screen. Beautiful to record, and there we go. Try that again. So then he's introduced us to Matty, who is a client. Matty is very, very good at the trading. He's got some bigger kahunas than Izzy, so he makes some good money. And he runs a mentoring on it as well, which is arguably more accessible than trading for him at the moment because he's so busy with people coming through. And all of them are making money, which we got to stop because I need Matty to get back on the trading platform and start juicing himself back up again because I need him to start making millions. So we've got Matty on today because you all know how I feel about Bitcoin, about property, about all of these get-rich-quick schemes, and this includes trading. And like any of you have been around long enough, you'll know that I don't care. I don't hate the investment. I don't hate trading. I fucking love trading. I don't do it because I'm a psychopath up top and I'd sell and buy way too often. I'd lose all my money. But I love the idea when it's done correctly. I badmouth people on Instagram who do it shit because most people are out there just trying to make money off other people, not doing it properly. Matty and Izzy are two people I respect very highly in this space. Matty in particular at the moment because he's having a real crack at it and he's actually got some success and years and education behind him. A lot of you guys who want to make some money, we talk about stocks, we talk about this, we talk about that, especially you, Katie. Matty, Katie will be your best client. She'll sit there and she'll do anything to make money. So we want to make sure that if you're going to have a crack at this stuff, and it is a skill, Matty's not teaching you how to make money. He's teaching you a skill set. And that skill set can be applied here and can be applied across a number of other things. And if you are going to do it, this is the person I want you to learn from. So Matty's on here today. He's going to give us a bit of a presentation. This has got nothing to do with us, as in Three Kings this isn't our advice. This isn't, it's just where if you're going to do it, this is the way you want to do it, and giving Matty a bit of a platform to chat on. This doesn't replace your current investment strategies, okay? This doesn't replace it. This enhances it, where we have our core strategy to achieve our worst case scenarios, etc. And we have little pockets of alpha satellites, that kind of thing. And this can add to those pockets to try and enhance your overall portfolio. It is not a replacement to your actual portfolio. So without any further ado, Matty, welcome on. Go for gold, mate. Tell us what you want to tell us.
Beautiful, mate. Thanks. So I'll start by sharing my screen here. So I believe that should be working now, right?
Yeah, that's on.
Okay, beautiful. So, hey guys, my name is Matthew St. George. I am going to give you a bit of a workshop today. Obviously not going to be really discussing anything sort of strategy-wise. I'm going to be giving you an intro to the speculative sort of investment space. Basically, what I do as far as trading, how we can use this to, enhance our wealth if it's of interest to you, and basically just sort of the things you need to know if you are going to consider it. So if you do want to see any more information or anything about this, I do post a lot of stuff on Instagram, largely, a bit infrequently, but there is some valuable info there if you do want to check it out. Now, of course, I've got a bit of a disclaimer here. It's always a bit of, you've got to tread carefully in this business, but look, anything I discuss today or show you on the charts, none of it's advice. It's all just going to be just general information to kind of give you some info about the space. So to start this off, I am a full-time trader and mentor. Okay, I have been mentoring for quite a little while now, not as frequent as I'm doing these days, but something on and off over the years. Prior to me doing this, I was a hydraulic and fire engineer, and I did this for the past 7 years. So previous to that, I was actually a plumber, made the transition to go corporate, and then look, always wanted to get out of that as well. So I am Sydney based. I was born and bred in the West. Unlucky I never saw Ryan out there to have a bit of a punch up, but I am Westie and born and bred that way too. So I am a trader, and look, whilst we do have a lot of different markets to trade, I do focus on the foreign exchange market. Okay, it is the largest and most liquid market, and therefore this is where I want to participate in. Okay, we can obviously trade stocks and buy companies. I like to buy pieces and sell pieces of countries. So a bit bigger of a space, a bit more liquid, a bit more fluid, and a lot more opportunities as a trader. So personally, I am soon to be a married man. I do have a fiance named Jess Luger. I own 2 fluffy dogs. I do love my food in the gym, and I'm a bit of a night owl. The markets will do that too. Izzy would know that as well. So to give you a bit of an info about trading, okay, what trading actually is, all right, it is basically a profit-seeking activity that you achieve through price speculation. So what this means is that basically we're going to be viewing some sort of instrument, and we're going to be looking at the current market price and basically having some sort of edge that tells us whether we think it's going to increase in price or decrease in price. And should we be, successful in that speculation, we will be able to make money either way it goes. Now, it's obviously the same on the opposite side. You can lose money if you get it wrong. This is why we have risk management principles to control that downside. Now, when it does come to trading, there are many different markets you can trade. These are probably the top 6 that most people would get involved in. Forex is a bit less popular these days. There seems to be a huge popularity with the cryptocurrency market. Now, whilst it is obviously the current trend, there are some pros and cons with this. So I stick to the Forex market, okay? And this is because it is the most liquid market of all. It is 24 hours a day, 5 days a week. And we do get leverage of up to 1 to 3,000. Okay, a lot of people talk about cryptocurrency and the leverage it offers. It is high leverage, but nothing compared to 1 to 3,000. Okay, you can just imagine 3,000 times your money on your risk. You are handling a lot for the margin you have to put up. Now, US futures and commodities, also a pretty popular thing to trade. It's not too bad to trade those sort of markets. There are low trading costs. The advantage that you have if you're going to stick to something like the futures is that you will come to the charts typically at the market open. Now, if you have a day job, it's a little bit more difficult. The market open is quite late at night. It's about midnight to 1 a.m. You'd have to be on the computer, therefore a little bit late for most people. Cryptocurrency is fine. It's 24/7, which is an advantage compared to Forex, but it is a less liquid market. It generally moves in accordance with Bitcoin, and due to the lack of liquidity, you do get larger spreads. Now, the last 3 ones, not really something that I get too involved in. Okay, CFD trading is basically participating in stocks with leverage. Option trading, out of my league as far as being knowledgeable about it. I haven't tried it, not really entertaining it. It is quite overwhelming to most people just with the terminology and things you need to learn. But it is good for hedging. Okay, if you obviously own stocks, you can be doing some options trading to hedge your portfolio. And spot trading, okay, kind of what we would be doing a little bit in some sense with Ryan's advice with stocks. If we purchase it and it looks like it doesn't meet the criteria for the portfolio anymore, we'll get rid of it. You just might do this on a bit more of a higher frequency. Okay, so no leverage. We actually own the asset. So if worse comes to worse, we hold on to it. It is much lower risk. Now, the thing about trading, no matter what market you do choose to participate in, it is a game of probabilities. Okay, and it's one of the things that makes it very difficult to become very competent at and stick to, because you have to get comfortable with losing. Okay, and the thing with trading is you come to the markets with an edge, and that edge will play out over a series of trades. So sometimes those series of trades may have you absorb more losses than you'd like before you strike a winner. Okay, and when it comes to win rates, no one has a 90% win rate. So you are going to have to accept that you may win 60, 70, 75, 80% of the time. Okay, that's a realistic expectation. And the funny thing about trading is, since it is all about your risk to reward, in essence, how much money you're risking versus how much you are likely to receive if the trade works out, you can get away with winning 3 out of 10 trades in some situations for some traders. So psychologically, it is a bit of a steep learning curve to get used to the emotions involved. What this diagram is illustrating here is that if you do lose 7 times or 6 times in a row, your 7th trade is likely to be more likely to be a winner than the 6th, the 5th, the 4th, the 3rd. Okay, and that's just the probabilities. So the goal, no matter what the account size is to have a starting balance and obviously grow it to a larger end balance. Okay, time irrelevant. It really doesn't matter how long it takes. And that's the essence of trading. No matter what the market is, we are always governed by this principle. Now, when it does come to trading, we do have some essentials. So no matter what market you choose to operate in, you will need typically these 4 things, which are all governed and included in somewhat of your trading edge. So in order to be a successful trader, you need to have an edge. It doesn't matter what it is. Some people have edges that might be technically better than others. But for the most part, you create an edge, and that edge must have components. And these are the 4 primary components, in my opinion. So the first thing is you need an instrument, okay? And that is an instrument that you want to trade. If that's Forex, that's going to be a currency pair. It could be something like a euro yen. If it is not a currency, it could be something like an index. It could be something like a futures, the Russell, the S&P 500, anything like that. It can be Apple, Facebook. It just needs to be something you can trade. Now, you also then need a session time, which, just like a normal job, you have your hours of operation. We have the same thing in trading. So some people come to the charts for very limited and specific periods of time. Others span the charts over the course of the day. It doesn't matter when, but your instrument and your trading session will tell you what to trade and when to trade. Now, when you have your instrument and your trading session, you obviously also then need an edge which will yield a positive expectancy trading model, which effectively means that over the series of trades, you will come out positive. Okay, and that's all we look for when we are developing a model, basically to come out on top over the course of a number of trades. Now, your trading model will tell you when and how to enter a trade. And this is the part where most people struggle, okay? Building an edge that is going to be successful, and then maintaining that edge, developing it further, and believing in it fully. Now, once you have your trading model and your instrument, you then need to understand your risk management models, which is determining how much you're going to risk per trade. So all about capital preservation here, making sure that you are in the game for long enough, because if you don't have any capital to risk, you have nothing to gain. Okay, so risk management is everything in trading, and psychology is all about this stuff too. So with your risk management model, once you've got that sorted, the next thing is obviously to profit. So you need a profit system, and that is basically a way that is a system or methodology that's going to tell you when and how to get paid. And any of this stuff, there's no right or wrong. It is all individual. Everyone has their own edge, the way they take profits. Some systems are definitely better than others. Some are less subpar. It's all about the trader's ability to stick to it and be consistent with its application. So given that trading is all about price speculation, and that's what we're doing in this business, there are 2 primary ways that you can price speculate. And that's typically through technical analysis and through fundamental analysis. Now, I don't really get involved in fundamental analysis. Some people use it in conjunction with the technical analysis. I believe basically that anything we wish to see, we should be able to find it on the chart. So if we stick to technical analysis here, it's basically the study of the past and current price movement, and the study of that will be able to allow us to predict the future price behavior. Okay, so this can be things such as candlesticks, support and resistance, market structure, anything of this nature. The fundamentals, it's more a study of the intrinsic value of something, of your instrument. And the objective is really just to understand if it's trading at premium or discount to its fair value. And you can do this through reporting, economic conditions, sentiment, stuff of that nature. So understanding the preference, my preference here, which is technical analysis, some of you may be aware of it. It's typically things just like your support and your resistance, okay? Your trend lines, your market structure, anything of this nature. Now, it all looks well and good on a Google slide. So if I take you through to a chart here, we can see the same thing in practice. So if we're looking at a screen here, you're going to have support and resistance lines on the chart in all sorts of places. So if we just pick a time frame here, every trader approaches their technicals differently. Some people may opt to use support and resistance, which could be as simple as putting a resistance zone above your price, and you may then select to put a support on the chart. And it might be your objective to catch the move from here to here. You may also include other tools on the chart. You could have things like trend lines. You might be looking for a trend line break, which we use like a geometric angle to help determine the behavior of the price, whether it's trending up or down or where the momentum shifts. Should you be doing this, you might be looking to take a trade from a break of a trend line, breaking a support, heading to a lower support. Now, however we opt to trade on the charts with whatever technicals we're doing or whatever strategy you have, we possess the ability to make money or lose money through this process. So if someone was to say catch a move from here to here, this would be a distance of say 80 pips, which is a unit of measurement. The time it has taken to go from here to here has been 1, 2, 3, 4, 5, 6, about 8 to 9 hours. And we would make money on that distance traveled, depending on the trading volume we use. Now, there are many ways to do this, many ways to make whatever money we choose to desire or we want to make. We'll cover that a little bit later when I show you some trading journals. But for now, how we take trades is very simple. If we think the price is going to go down, okay, we effectively see something on the chart. Maybe it's a candlestick, maybe it's a support. And we basically opt that if we believe the current market price is going to trade lower from where it is now, we will look to enter a position and have it go to another target on the chart. Now, everything about trading is all about your risk to reward, which is what this tool shows. So if you were wanting to risk $10, okay, if your trade went to your target, you would effectively make 3.43 times that. So in essence, whatever money you're risking, you are making threefold that amount. So it's quite good. Most people, it's effectively like 100% return per reward factor. So you do this several times in a week, making 3.43 times your money per trade, or 1 to 2, whatever else. It can be quite lucrative. Now, back on these slides here, okay, whatever you choose to do as a trader and whatever methodology you choose to stick with, you will become some sort of trader. And there's different styles, different personalities, different characteristics of each. There's no right or wrong when it comes to the type of trading someone does. You have typically 4 categories, and there is a 5th one, which would be, say, position trading. It is probably more for hedge funds, banks, retail banks, whatever else. So scalping, it is basically you get involved in the chart and you aim to catch very small movements. Okay, it's a very short duration of time in the trade, and you are very active. Okay, these are high frequency traders. You may be in and out of the market in the space of 5 minutes, 10 minutes, 15 minutes, in and out. Okay, not everyone will suit this sort of trading. It does have generally a lower win rate just due to the frequency of trading. The frequency makes up for the lower win rate. An intraday trading, which is my system of trading, my preference, Izzy also does more like an intraday style. Basically, we are pretty active on the charts. Okay, we basically aim to trade typically per day, several trades per day, maybe 3 to 5 trades, sometimes more. And you basically can trade every day for a certain period of time. So we might come to the charts for 1 to 2 hours a day. That is your daily activity. Now, You can have something like an intra-week trader, where basically you might take a trade and you might hold it for a few days. You're going to close your trades before a week ends when the market closes. And it is basically for the people that are a little bit busier and can't be as active to view the charts. And last of all, you kind of have like swing trading. So swing trading is basically you take a trade, you might be holding it from several days, several weeks, several months. This is not for everyone. Okay, swing trading is very emotionally taxing. You have to be very comfortable with prices going up and down and reducing your profit, going into drawdown, whatever else. Basically, you need to have a lot of patience. And for most people, myself included, I don't have a lot of patience when it comes to this sort of stuff. So it's a very passive approach. And if you have a very busy job, something like a swing trading or intra-week can be quite beneficial for people in this position. If you have a certain amount of time you can dedicate to the charts per day, maybe it's 1 hour, 2 hours, you might be more suited to like an intraday or a scalping sort of trader. It's always instrument independent, whether you're doing stocks, futures, cryptos, CFDs, you can fit one of these profiles no matter what the market. Now, as Ryan kind of said in the intro, okay, we have a bit of a risk pyramid here. So most of us that are his client, or part of his clientele, we're going to be getting involved in basically the savings, basically getting our cash flow sorted. We're going to have our buffers. We're going to focus on our travel and luxury, and we're going to be making sure our cash flow is sorted. Okay, this is the primary factor of any kind of financial foundation. Then once we have that kind of sorted, we're going to get involved in our investments, and this is where most people stop. Now, this is what most people need. This is all people really need, to be honest. If you are choosing to get involved in trading, you are playing in the speculative component, which is high risk, high reward, and typically leverage involved. Okay, so this is a speculative space to be in. Okay, it's not all sunshine. You are going to have to win money, lose money. The goal is to take a certain amount of capital and grow it faster than the market as such. For some people, that turns out to be quite profitable and lucrative, and the returns can far exceed the market. Some people, they just enjoy it and will continually deposit money and not necessarily beat the market. But if you have a good edge and you have all the trading essentials, there's no reason why you can't beat the market returns year on year consistently, should you possess experience, the right skill set, and obviously stay consistent with refining your practice. So trading, it is any of those instruments we mentioned at the beginning. And basically it is, just always to remember, it is speculative. Now, a lot of people might be wondering why you might want to consider trading. There are definitely some positives and there are some negatives with that. So the positives of being involved in trading, it is a purely liquid business. Okay, there's hardly any expenses. As long as you have an internet connection, you have a mobile phone or a platform to take a trade on, that's all you need. I have a piece of software that I use, which is the trading application. This can be a free application, this software, or you can have a paid plan, which is about $15 a month. Besides that, you literally just need a broker to take trades on, and that's about it. So it is a liquid business, minimal expenses. It is mobile, so you can do it from anywhere you want as long as you have internet connection. Low capital. Okay, you don't need a lot of capital to start trading. You can start these days with some brokers with as minimum as $10, $20. Is it worthwhile getting involved to $10 to $20? Probably not. There are minimum amounts of capital you might want to start in, but anywhere from $100 plus is probably a good starting point. Okay, and I would definitely not recommend anyone begin trading with much more than a few $100s, just simply due to the risks. Now, it is a semi-passive income source. If you're a swing trader, it's very passive. If you're an intraday trader, it's semi-passive. Okay, it's a small amount of workload for a pretty good result. And it has huge income potential. Okay, that's what most people want to know. Okay, there is immense amount of income that can be made in this game and lost in this game. So as far as the negatives, it is a steep learning curve. Okay, especially it is also an industry where there is a lot of information out there and a lot of conflicting information. There's a lot of people that are marketers that are just willing to sell you a product, and the information is just pre-packaged, rubbish that may not be that great. So it is a steep learning curve, and you don't want to be getting jumbled up in a lot of different conflicting information. So as a wise piece of advice, once you pick something to learn, just stick with it. Any methodology that has a positive trading model attached to it will be successful as long as someone continues to stick to it. Now, it is psychologically taxing. Okay, trading is quite brutal emotionally, and it's something that we're not typically used to. Okay, losing money frequently is a lot more difficult than having a stock being negative and we hold on to it. Okay, cutting a trade is difficult. Losing, accepting loss is not something we're typically used to. Try walking down the street and dropping a $10 note at you every time you leave the house. It's going to shit you after a while. Now, trading is not suitable for all personalities. As Ryan said in the beginning, it's not something that he's been entertained in. He gets involved with active spot trading, of course, but day trading of this nature, not something everyone wants to be involved in, and not something everyone needs to either. So the negatives are pretty much this. Now, many people that do get involved in trading, okay, they never leave. So it does create some obsessive tendencies. You will spend a lot more time on the computer, and you may end up finding yourself wearing glasses like I do. So definitely some negatives there, but the positive far outweigh them. So as far as getting involved in trading and what the roadmap looks like, it's not a very outrageous journey or immensely complicated journey. Okay, basically, you need to have a commitment to study. You need to dedicate the time to learning something. Okay, whether it's learning my strategy, whether it's learning someone else's strategy, or learning online on YouTube for free, doesn't matter what you do. You have to find something and stick to it and learn the ins and outs of it. You need to find confidence in your edge, which means you need to back test it. Now, this can be something you do for a month. It can be something you do for 3 months. You just need to find confidence in your strategy over the series of trades. Once you begin live trading, your first objective is simply just to get profitable. It's not about making money. It's not about aiming for certain targets. You just need to be able to make money consistently. You do that, and you're sorted. The goals, the objectives, the targets, increasing money comes after that. Now, should you pick it up, you have endless opportunities. Okay, trading, you can compound your money, you can seek funding. Okay, and that's one of the things with trading that many things doesn't have. You don't necessarily have the same thing in crypto or other markets. You can get funding in Forex, which means you can pay a small amount of money to access a large amount of capital and basically make returns on an account that's funded and pay a certain portion to the firm and keep the rest for yourself. Okay, so it just gives you high amounts of money to access and more returns. And effectively, that's it. That's the end game. Once you are able to make money, you consistently snowball it for as long as possible. As long as you can continue to grow something and exceed the returns of the market or the cash in the bank, this will snowball into quite a sizable amount. So if you want to know roughly potential results, okay, I do have some journals here of some people that I have been mentoring. These are people that have had no prior trading experience, and they've just simply started trading with myself with the edge that I have created. So on the chart here, we have effectively a student here. They have started with $100. I've everyone start with $100 just to make sure they're not risking too much money until they learn the skill. They have a goal that we aim for. It's a very sensible, realistic goal. And should they achieve the goal which I've set out, they will be able to achieve a 20% return a month. Now, if they progress in skill, they will have access to 60% returns a month. And whilst it seems outrageous, these returns, they're certainly doable, and we can see that here on this dashboard. So these students have been trading now. This is their 5th month trading. You can see the returns here. Whilst it is $100, this can be $1,000. It really doesn't matter the amount. 22% return, 34% return, 21, 183. Market conditions were great. 38%. Okay, so in order, the general market might do 6 to 10%. something like this on the side can be quite profitable if you can have this sort of skill. Another journal here, this student has done 5%, 12%, 25, 40, 21. So making good returns overall. We can see a $100 balance here has returned to $3,200. So a cumulative return of quite a sizable amount, 622%. Now, this number here can be 10,000, which would make this a much larger number. It's really irrelevant. Okay, we start small, we build it. If you have the skill, you can deposit more money in. That's the safest way to do it. Another student here with 20%, 37%, 49%. And yeah, this person's had a losing month. Their losing month was 26%. And then thereafter, they have had winning months, with a total return of, it's about 138% here overall. So if you can have your foundation set up correctly, and you can be taking care of your investments here, building a generational wealth, all of the targets that Ryan set out for everyone individually, trading can fit this speculative portion where we aim to enhance those returns. Whether it's just to add to the income, whether it's to allocate into other investments, this is stuff that is all individual, but this is where we look to play if we want to. Now, as far as myself, okay, all of these student journals you've seen here, they have all undergone a 12-week mentorship. It is a one-to-one mentorship. I don't sell an online course or anything like that. I basically have a carefully designed, systematic mentorship process where basically I have 12 carefully designed lectures that are 60 to 90 minutes each. We meet once a week at a specific time, sets that individual. There are assignments, there are feedback, there are tasks at hand to help and develop the person's knowledge and absorb the contents of the lecture. And throughout that mentorship, the lectures compound on one another, all leading to the 4 essentials that I listed at the beginning. Okay, so I give people a profitable trading edge. The system has the potential to be, a 75% win rate. A business plan, which involves our risk management model and our profit system, and our targets, which we can see here are 200 pips a month. Now, in order to understand this, 200 pips a month is just a unit of measurement that we aim to catch. If we take a quick glance at the chart here, this is a 1-hour chart, and in this movement down, we have seen 154 pips across 1, 2, 3, 4, 5, 6, 7, 8, about 9 hours. So if someone caught this move across 9 hours, there is 154 pips on offer. Therefore, you can imagine that a 200 pip target is quite over a month, is quite a sensible and conservative number for someone to reach, should they possess the skills. So once we have these things in case, okay, I give people a preferred instrument that I believe is a good starting place for people, and unlimited communication throughout the 12 weeks. So if this does interest anyone and they do want to get involved in this speculative allocation of their financial path, this is a service I offer. It is $4,000 for the plus GST for the 12 weeks. And it is a process that should allow you to be profitable and have a strategy and continue thereafter with a skill set to carry for life following the 3-month program. So you don't have to do this with day trading. To give you an example, you may just do this on stocks. You may be wanting to purchase a stock and you just want to understand whether it's at a good price or not. You could simply open the chart on a higher time frame, and if you knew the technicals, you might understand that buying into something like Tesla at these price points would be highly unfavorable. Okay, yet buying somewhere at a lower price point might be far more beneficial. The technicals will allow you to see that. So many different use cases for the skills of trading. How you use it and how far you want to get involved is individual. But if this is something you want to get involved in, I am more than happy to be involved in that process with you and give you all the tools you need, which is a unique proposition for this sort of thing. Not many people do one-to-one mentoring in the space, but I have decided to fill that gap. and there are many success stories with it. So if anyone wants more information, just reach out. I'm more than happy to take you through some finer details, but effectively that concludes my presentation. So if there are any general questions, more than happy to answer them, whether it's now or later. Otherwise, I'll leave the forum open or hand it to Ryan.
Yeah, ask some questions, guys. Matty, that was mad. Thanks, bro. Really appreciate that.
It's all good, man.
Anyone got any other questions? Katie, surely you've got a question. Are you even still in here? Your phone's been dipping in and out and flat out. Nothing. Nada. Come on, man. All right. If you have any questions, flick them in, chuck them in the chat, and then I'll let you come off mute. But Matty, that was mad. Guys, I can't stress enough. Can you unshare your screen, Matty, for me for a sec, please?
Yeah, man, all good.
All right. So, oh, why isn't this working? Hang on a sec. I don't know what I'm doing, eh? I suck at this. There we go. All right. So, oh, fuck. No, it's not working. How do I unpin you? There's Katie. You've got Katie up on the screen now. Do I get me up on the screen?
No one needs to see you, Ryan. Don't worry.
4,000, 8,000 for Katie, Matty. I don't know how to, honestly, I'm about to throw my phone somewhere. How do I?
What are you trying to do?
I'm trying to put me up on the screen.
Can you share the screen and show that?
Well, it must be when you're talking. If everyone stops talking, I'll talk. Okay, cool. So, no, it's not working. So, I'll just talk with Katie's head on the screen. That's fine. So what Matty said, right. So there is risk involved in this. You investing is risk. When you are investing, you are taking risk. So it's really important that you understand that this isn't exactly like Matty said. It's not chuck your money and you make coin, right? It doesn't work that way. But it is a skill set that you can develop. Exactly what he said. It's a skill set that you can develop and you can use for stocks, etc. Right now, regardless of how you want to use this skill set, that pyramid, which that looks very familiar, Matt. Did you steal that off me?
Actually, I have it myself. In part of mine. So yeah,
we've got the Three Kings version. So you guys have all seen that before. I put up on the group. Roughly between 5 and 20% speculation allocation, we are always okay for, right? That's what your portfolios are built with. That means that, you know, the 80 to 95% of your portfolio via your superannuation, via your personal investments, we will manage and we will have long trades on. We'll have long, we'll go long on them essentially, right? They'll be long buys. That other 5 to 20%, depending on what we agree upon, you guys can do whatever you want with that as long as it doesn't affect your other stuff. But it is very important that you guys do it properly, because I know a bunch of yous that are going to watch this, not so much so many of you on here, that have bought stocks, that have bought crypto, that you've dumped a lot more than 4,000 on and just fully blown hoping for the best and have gone through the floor, right? So the reason that I got Matty on here is, if you are going to speculate, there is a place for speculation with a certain amount, right? There is a place for it. And if you're going to do it, you want to do it properly. And if you can learn this skill set, it's something that you can then use across the board in potential speculation for the future. So it's really important, though, that you're not just thinking, bang, I'm just going to go 100% into this. Obviously, I can't stop you, but I'll be very upset. And like, as in 100% of your allocation into this. But you've got to have a strategy behind it. The reason I'm bringing Matty in here to talk to you guys about this is a big risk for me, because if some of you are morons and you decide to just load up and think it's easy and you lose money, it's a big risk on me. It's not my advice, but you can always pin it back on me. So I'm taking a big leap here in introducing Matty to you guys to teach you the right skill set to do this. It's on you to make sure you keep up the education, to make sure that you actually do this properly and don't just think I'll do it for a day. I'll give Matty $4,000. I'll be a millionaire by next week. It doesn't happen that way. Matty, how long you been doing this for?
So I mean, by now it's been since 2014. So late 2014, 2015. So yeah, it's been I think it's 20, yeah, maybe 2015, sorry. Just after Izzy introduced me to, some people in his network, and then I got involved. So it's been a long time for both of us.
So it's a good overnight success, Matty, eh?
Exactly right.
The
It's a
only
lot
thing,
of hours, that's for sure.
the only thing overnight about this is when you're frigging trading people, all right? So it's you trade overnight, the success doesn't happen overnight. Izzy, how long have you been doing this for?
Yeah, same thing, 6 to 7 years.
Right, Izzy still works full time. Matty's just stopped. So they've both made good money and they're really good at what they do, but don't expect to just jump into this. This is for long-term wise, taking, like Matty said, 200 pips a month over 10 years, right? Even if it's 100 pips a month over 10 years, the effect that doing this properly can have is amazing, right? It can really juice up what we're trying to do here, but you've got to do it properly. But that's pretty much all I want to say. Anyone got questions? Katie, you've come on screen, so I'm guessing you've got a question. Usually you hate being on video, so no questions. All right, sweet. Anyone who's watching this or is on now, if you want to talk to Matty further, obviously probably the best way to go forward would be to book in a meeting with Matty and sit down and have a chat with him further from that sort of point. Go through whatever the go is from there. Otherwise, you can come to me. I'll put you in touch with Matty. We're going to do this again with more people on because I stuffed up the date, but you guys get the exclusive first look. I'll post it. Like I said, get in touch. Anyone got anything else to add before we jump off? Because I'm starving. Nah. Cool. All right. Give us your feedback too. Let us know. I know you're all hesitant, but give us your feedback, what you thought of the presentation, so Matty can juice it up for the next one or keep it as is or whatever. Otherwise, I'll chat to you all soon. I'll stop the recording. Matty, thank you very much. You're a gentleman. That was really good. Izzy, go get that post-workout shake in, bro. It's been at least 30 minutes. Got to get the anabolic window in. I'll chat to the rest of you later. Jump off, and I'll speak to you soon.
Peace. Thanks, Matty.
Bye-bye.